All right, welcome everyone, and thank you so much for joining today. My name is Nadine Baya. I'm the Academy Manager at A4S, and thank you for joining us today for the webinar on Lead the Way, Finance Culture. Finance teams, as the custodians of business value, need to enhance their contribution by including sustainability considerations in their day-to-day analysis and thinking. And for many finance teams, thinking and operating in an integrated way requires a significant shift in culture. So in today's session, we will explore the role that finance can take to support the integration of sustainability in finance and the cultural shifts required. These A4S monthly webinars are part of the A4S Academy program and are also open to non-participants. And in case you're interested in learning more about the Academy program and how you or a colleague of yours can apply, please have a look at the follow-up resource email we will send out after this webinar. Please note we are recording this webinar and it will be made available on the A4S YouTube channel afterwards. So today we will start with a discussion with our panelists to explore examples of how to drive change within the finance function towards more sustainable business models. This will be then followed with a Q&A with the audience. And we will then have a brief introduction to the A4S finance culture resources available to you. And we will finish with a wrap up. You can ask questions freely in the chat function throughout the webinar, and we will try to address these as part of the Q&A later. We will also be asking you questions about the content covered throughout the webinar using Zoom polls, and which you will need to complete in order to get your CPD and CPE points. So please make sure to participate in all the polls. And just to cover the learning objectives of this webinar, so after completing today's course, you will be able to describe the role that finance can take to support the integration of sustainability within the organization, identify the actions to take to shift the culture of the finance team, and translate learnings of others from practical examples to your own work. So, as announced to you already, I'm very pleased to introduce you to today's guest speakers. With us are Nicholas Goodman, Chief Financial Officer and Managing Partner at Brookfield Asset Management, and Joe Allanson, Executive Vice President of Finance and ESG at Salesforce. The panel discussion will be shared by Davinder, the Executive Director for the Canadian chapter. And before I hand over to Davinder, I would actually like to start with a poll on key barriers. So what do you think are the key barriers to sustainability-focused finance culture in your organization? Is it time pressure, perception, relevance, experience, or maybe something else? Please let us know by ticking all that apply. Thank you everyone for participating. And it seems that particularly time pressure and experience are two key barriers to sustainability-focused finance culture in your organization, but perception and relevance are also similarly important. Thank you. We will now move on to our panelists. And I will hand you over to Davinder, who will provide you with a brief introduction.
Thanks so much, Nadine. And hello, everyone. The role of the CFO and the finance team has moved from well beyond just record keeping. Now it plays an important role in driving strategy and decision making. Finance teams, as the custodians of business value, need to enhance their contribution by including sustainability considerations in their day-to-day analysis and thinking. Finance teams are the forecasters of future performance and risk and can play a key role in bridging the gap between business growth strategy and sustainable planning. I'm also very excited to have Nicholas Goodman and Joe Allanson here with us today. We're going to have conversations with them to explore how they have integrated sustainability into the finance culture and how they played a role in the process. So Joe Allanson, he's the Executive Vice President of Finance and ESG at Salesforce, and he oversees the integration of ESG and finance within the organization. Salesforce is a Fortune 200 company, pioneered the enterprise cloud computing industry, and is the global CRM leader, empowering companies of every size and industry to digitally transform and create a 360-degree view of their customers. Since its founding in 1999, Salesforce has pioneered innovations in cloud, mobile, social analytics, and artificial intelligence, enabling companies of every size and industry to transform their businesses in all digital work from anywhere era. Salesforce integrates ESG into decision practices and uses comparable, consistent, decision useful, and verified ESG disclosures to accelerate stakeholder capitalism. Joe has been at Salesforce for the past 18 years, and most recently as the Chief Accounting Officer. I want to say hello, Joe. I know you're on screen there. Let me introduce Nicholas Goodman as well. Nick is the Managing Partner and Chief Financial Officer at Brookfield Asset Management. Nick is responsible for Brookfield's global finance, treasury, capital markets, and investor relations functions. Brookfield Asset Management is one of the world's largest alternative asset management companies with more than 625 billion in assets under management. It focuses on investments in real estate, infrastructure, renewable power, private equity, and credit. ESG is embedded throughout the investment process, starting with initial due diligence through to exit to the investment. And Brookfield has a long-standing culture of ESG integration into business strategy. So again, welcome Nick and welcome Joe. It's great to have you here. I want to maybe start off with some questions, and those that have joined us today, if you also have questions for our panelists, I encourage you to use the chat function and add your questions in, and we will get to them towards the later half of the panel. So with that, maybe Joe, I'll start with you with the first question, and maybe ask you, how has your role evolved over the past few years with regard to increased focus on sustainability? And how do you see the role of finance evolving more widely?
Well, great. It's a great question, Devinder, and welcome everyone. And thanks for having me here today. I'd say as I look back on my career journey, there's been two common themes. One is managing tremendous amounts of complexity, as well as collaborating with others to solve many of the business challenges of the day. When I started at Salesforce 18 years ago, revenue in my first year was 176 million US dollars. That's million with an M. And 18 years later, we're going to do 26.5 billion with a B this year. So there's a lot of complexity and changes. But I would say that, if you ask me, if you look back, dial back into time, 10 years ago, if someone in finance said that they were worried about the environment, I'd probably tell you that they probably weren't in the right swim lane here. But you fast forward to today, where our Vice President of Sustainability, Patrick Flynn, goes around saying accountants are going to save the planet. And I love that kind of concept here. I took on this new role several weeks ago. Really, I think it's a premonition of what's to come. Sustainability is a critical part of the modern corporation. It is much, much larger than most people think. Recently, I joined the board of directors of the Value Reporting Foundation. Mm-hmm. Most people refer to them as the SASB, the Sustainable Accounting Standards Board here. I think it's important to inform, shape, and influence the corporate reporting standards. So Devinder, I'm trying to echo what my colleague says. Accountants are going to save the planet here. So back to you.
Thank you so much for that. And I actually believe in that mantra too. Accountants will save the world. Shifting to Nick, then perhaps Nick from Brookfield, how do you see the role of finance in supporting Brookfield's overall ESG strategy? And which key areas are the finance teams involved with?
First of all, thank you everyone for joining. It's a complex question. Like, everyone in Brookfield is involved in ESG to an extent. Joe's point about 20, 30, 40 years ago, ESG wasn't a concept, but we had a large renewable portfolio in our business. And so, crucial to the kind of real assets that we own and operating in communities, ESG was embedded in the way we made investments without thinking of it as ESG or even thinking about renewables. We were buying assets that we thought were well positioned to generate good returns over a long period of time, and integrating well with your local environment was crucial to protecting the downside value, having downside protection. Whether that be building fish passages on your hydros or caring about the birds when you were building your wind farms, it was all just integrated into having that social license to operate. And so ESG has been embedded in what we do for a long time without ever putting our finger on it, quantifying it necessarily, or reporting on it. Now roll forward to today and the last few years. Finance for us, I think of finance being accounting, reporting, capital markets, treasury. We're very active in issuing green bonds, sustainable finance, and finance plays a very leading role in developing our frameworks for sustainable finance and our green bond frameworks, and interacting with the market and telling our story. On the accounting side, I would say, and I think this is common across a lot of organizations, the tracking of emissions and the gathering of data to this point has been an operational role. It's not resided within finance, it's resided within our operations teams who, from the ground up, like when we report generation in our hydros done at the operating level, gathering that emissions data and some of the reporting things we want to be able to say publicly has been done outside of finance. But as you move towards having to have reporting frameworks, consistency, data quality, finance has to take ownership of that, in our opinion, and our finance team is becoming more and more involved. Our renewable business is at the forefront of this, but across the organization, finance is starting to really sink their teeth into this and figure out how do we build the same kind of reporting framework and data integrity and build processes around ESG that will allow us to do the things that we want to do and be able to track and report. So I would just say, as it evolves, I see finance playing more and more of a leading role in this regard.
Excellent. Thank you. Transforming the finance culture within an organization can often be a step-by-step process, from initial awareness through to acceptance of change, and finally advocacy, and then open support of the integration of sustainability into the finance function. However, the methods of achieving this can vary, and there may be multiple challenges along the way. So Joe, what are the key initiatives or processes that you have undertaken to help embed sustainability into the finance culture?
Yeah, that's a great question, Devinder, and I get this question actually quite often, and I'm not sure if that's surprising or not. And certainly the step-by-step process that you articulated is very effective, and that's usually a starting point for folks. But what I also, to expand on the dialogue, what I get from my peers in Silicon Valley is no one needs convincing that this is an important issue here. It's at the board level, it's at the CEO level, it's at the CFO level. No one needs that. The question that most people are asking me is, how do I get going? It's where do I begin? What are the tool sets? And when I hear that question from my peers, there's an element of urgency in their voice. And so besides the steps that you articulated, Devinder, I'm just going to add some practical thoughts for people, and that might prove to be valuable. First of all, what I tell to people is lean into your corporate values of your company, lean into those. At Salesforce, we are founded with 4 values of trust, customer success, innovation, and equality. And we believe that the planet is an equal stakeholder in what we're trying to do. The other thing I would say to people is be really clear on the correlation between how ESG performance or sustainability performance correlates to your valuation. I think that's an important dialogue to make sure that finance people understand it. It's kind of finance geek topic if you want to think about it. The third thing is a conversation around a materiality assessment. Whenever I look at anyone's stakeholder impact report, there's over 100 metrics that are there. But what are the metrics that investors care about? And that's your materiality assessment. To me, that's an alignment document that is a stakeholder analysis document. It's very refreshing to take people through. It really clarifies what's important. And as I use the terms with finance professionals, this is the bottom line. The other thing I would say is number 4 is campaign. Accounts are going to save the world. That actually gets a lot of people to stop and pause, crazily enough. And then I think the other part that I'll spend a second on is, I think this is a confidence builder for those around you and embedding this into your culture. I think you have to build and accelerate upon existing materials that are out there. I think there's a tendency sometimes for people to want to do it themselves, not at the speed that we're operating with and the urgency here. You have to move faster. So I think there's tool sets that A4S has. There's webinars. They bring in great speakers, right, Nick? They bring in great speakers here. Symposiums, webinars here. The peer networking from A4S is unbelievable here. Also, the awards are coming up, our Finance for the Future here. More importantly, you're listening to trailblazers who are talking about what they're doing. Again, incredible idea generation that puts it in practicality. I'll also leave with a couple things. You can't do this on spreadsheets, folks. You can't do this. There's a lot of products out there. Salesforce announced Sustainability Cloud 2.0. It's carbon accounting in the cloud. It also helps you to find out where you are right now, but also where you're going and what can happen. And then also, today's a big day for Salesforce. We just launched our inaugural Tcfd report. I think this is incredible. This is an important element of our outreach to our shareholders. But again, all of these materials are there. We're all a community. We're all here to share. And I take advantage of it because it moves you faster and it's a huge confidence builder. Back to you, Devinder.
Excellent. Thanks for the plugs there as well, Joe. And good to see that. Good to see that report. Nick, maybe I'll move over to yourself. How have you ensured that finance professionals within the organization understand the nuances and importance of ESG terminology? And how do you think that having an effective finance culture is a critical success factor?
Yeah, I don't have any marketing or plugs to give here. So I'm going to be very honest with you and say it's a constant evolution. I'm not sure I fully understand all of the nuances of the terminology. There is so much out there and it's evolving. Similar to Joe's point, whenever people ask me what's your advice, it's just lean in. Everyone just has to lean in. You have to embrace this. And, some of it we force upon people, like with our Global Transition Fund, which I can talk about a bit, where we are actually raising capital with a specific purpose of facilitating the transition to net zero. And that fund will have specific targets around incrementality, avoided emissions, helping companies on their path to net zero in line with the Paris Accord. And so in that fund, every investment has to have an identifiable, quantifiable criteria and target, and we have to report on that. And therefore, we have to build reporting around that. We have to track and we have to maintain. And Carly Dick, who's in your academy this year, she's leading that effort, but her team doesn't have a choice. That's the job for that fund. So some of it's just forced upon us, and some of it is choice, like we are in our power business. We're going to produce our first TCFD report next year, I believe. We all produce ESG reports across the organization, and we are doing more and more and more, and people are being brought into it more and more and more. And we're having constant sort of education sessions across finance where we're hosting webinars, internal webinars, just to make sure people understand the terminology. Even if you're in our power business where it's constant discussion because you really are a leader, but if you're in our private equity business or real estate business, you need to understand the terminology, because every investor call or discussion with stakeholders, half those conversations, ESG comes up as a topic, even if it's just a throwaway question or it's a sort of dominant part of the conversation. Our teams need to understand the difference in terminology because it is technical and people take it very seriously, and different words have significantly different meanings to people, and you want to make sure you don't misstep in those conversations. So I'd say it's an evolution, but the culture, culture, ESG, we're talking on EEE, the S and the G is also incredibly important. And so our culture, at Brookfield, culture is everything to our organization. And it's everything that we drive towards. So when you talk about the culture, I believe we have a very good culture in our business of equality, of promote from within, of education, of driving people into stretch roles, of pushing people to learn and develop and strive for growth. And I think them, being wedded with the culture and ESG is something that people really identify with today. And so I think it's just really important for our culture of our business that we are progressing and we're aligned with the thinking of the people and everyone's bought into it. And that having that culture is just crucial to success.
Excellent. Actually, it's really riveting to hear that as well in terms of the progression at Brookfield's finance culture and the whole ESG culture as well. So maybe I'll move on to Joe, and I'm going back and forth here. Joe, there is more and more discussion around the need for assurance of sustainability information. How do you manage this issue, and how is assurance aligned to the wider financial reporting processes?
Well, first of all, I would say this question that you're asking, there is quite a bit of debate, particularly within the preparer community around this topic. And I'm certainly sensitive to the topic because there is truly a cost of that compliance and effort. And I want to be sensitive to that. And also, I think that because of the shortcomings in the conceptual reporting framework of the different standards, it's actually hard to sometimes correlate the true value of the assurance work with it. But I would tell you something, the way I think about it personally. And that is, I'm a big proponent of assurance. I was the one at Salesforce who supported the recommendation to have our outside audit firm, Ernst & Young, look at our metrics. They're both in climate as well as in human capital. The way I think about it, sustainability is not just a nice to have. Investors, employees, other stakeholders, they're holding companies accountable. And there is a correlation. You've heard Nick describe it here. There is a correlation between sustainability and long-term value creation here. And so when I think about it, with all of this in mind, at Salesforce, we believe in transparency. We also want to ensure that our information is reliable because we know investors are looking at it. And then lastly, as a manager, I actually like the rigor that it forces on the finance team in order to prepare and get ready for the assurance review and get feedback from the assurance process. So I like that rigor. I like it's all part of our growth strategy too on growing talent, as Nick was describing at Brookfield. There's very similar philosophies here. So again, I'm a big proponent of it in light of the debate that's out there.
Excellent, thank you. Nick, as a leader of finance, how do you initiate change and mobilize action across the finance function towards better integration of ESG into business as usual?
We're a fairly complex, well, I think it's simple, some things are complex. It's a large finance organization across sort of 5 different business groups, and then, BAM sitting across the group. You just need strong partnerships with all of the business. And, it's kind of like top down, bottom up, because some of this is just being, again, forced upon us by the demands of our public shareholders, by the demands of our private fund investors, with our private funds, whether it be in private equity, infrastructure, real estate, or in one of the ancillary products. It's part of the diligence process that our investors have when they are screening Brookfield to be their manager of choice for their capital. It's just, it's just where the market's moving. And I think we're in a great position that everyone that's been at Brookfield, you don't need to teach anyone about the merits of ESG. I think everyone here, as I've said, is in the culture. They understand it. What you have to do is get buy-in to mobilize around reporting and tracking and monitoring. So the culture's there. I'm not worried about integrating it into our culture. It's how do we integrate it into our business processes and our reporting and our tracking and monitoring. And that's just a huge undertaking, but people understand the importance of it. So I wouldn't really say we've had pushback. It just takes time. It takes time. And the hard part is everyone's bought into it. It's just the sort of lack of clarity about what is the standard everyone is striving towards. And if I put all this effort into a line around one thing, how do I know this one thing is not going to change and then everything changes? But, we've all got to do our best right now. I think there's a lot of companies out there that are companies, pension plans, insurance companies. They're all making very positive commitments. And COP26 is driving some new commitments. They're all pushing in the right direction, and everybody is trying. And there's being more and more alignment around the standards and what we're aligning around. But, you know, until we get there, the challenge is going to be committing to something that you know will change at some point.
It's trying to put a noose around change. It's a little bit hard, right? Excellent. Thank you. Before we, I guess, move on to the final questions for our panelists, we wanted to have a quick poll to highlight some of the key learnings from the webinar. So I think we'll put the polling question up. So how has the importance of the CFO and finance teams evolved over time? I think we've got, is that everybody? I'll let Nadine, yes. Okay, excellent. So I think everybody's kind of, you know, alluded to finance team plays an important role in bridging the gap between business growth strategy and sustainable planning. Excellent. Should we move on to the second question? Is there another one? Yeah. So what is the general process behind transforming the finance culture within an organization? Okay. It seems our audience is listening. That's excellent. That's I would say A is the right answer, starting with initial awareness and finishing with advocacy and open support. So excellent. And finally, Nick and Joe, we thought it would be interesting for the panelists to learn about some of the key challenges you have overcome when working towards a cultural shift within the finance teams. So Nick, I'll start with you. What are the key challenges you faced as a leader in supporting a cultural shift towards sustainability, and how have you overcome them?
I don't think it's within, I would just take this broadly in the organization. I think that again, I don't like to say it's a cultural shift because I think it is part of our culture. I wouldn't necessarily say that the way we deploy capital or think about investing has changed significantly. There are probably some sectors and some asset classes that we would have invested in 10 years ago that today we may not invest in. And I'd like to say it's because of ESG, but ESG, again, when you're buying real assets and you underwrite the long-term value preservation of the asset and your terminal value, you factor in what are the risks that could exist around that asset in the long term. And ESG is obviously a driver. There's many inputs, but it's always been the way we underwrite. So I don't think it's changed. There are things that evolve though over time that create new risks to your investment. And so we just bring in different considerations. So I don't think the culture and the way we think about it has changed. I think we are placing more emphasis aligned with most corporates around diversity and inclusion. And I think that's a big drive. Again, I think we believe that we have a meritocracy in Brookfield and that we have done fairly well on gender diversity. Those other areas we can improve in, but there are things just around the organization that we're all aligned in. We just have to effect change. So I don't think there's a cultural change. And again, I think on ESG, again, because we've had people that have been in the business and run the business for so long and have always believed that we do things the right way, they're just think, well, we do things the right way, but it's the education, right? Okay, but if you're doing things well, but you're not telling your story properly, then it almost doesn't matter what you're doing. Obviously it does from a fundamental perspective, but if you're not telling your story properly, you're not going to get credit for it. And so I think creating that focus around being able to tell the story and then keeping pace with the evolution and change, and now the need to start measuring scope 1, scope 2, scope 3, putting out TCFD reports. And I think it's just, once you get people bought in, the momentum is growing. And then obviously bringing in people like Mark Carney to the organization definitely focuses the mind and creates, again, very, very senior buy-in and sponsorship. And so I think all of that just helps again. So I wouldn't say we've had a shift in needing to change the culture. It's just needing to get buy-in into what we need to do to be able to tell the story and make commitments and, just understand what our clients are looking for and adapt to that. And so I think it's a lot of work, but there's no real pushback in the organization. Everyone is on board.
That's excellent. That's actually good to hear. The momentum, the resistance isn't there. Now it's just a matter of getting it done and figuring out how to do it. That's excellent. Joe, what are the key next steps in terms of improving finance culture? And what do you see as some of your challenges?
Well, before I jump in on that, let me expand on a couple things that Nick said, because I resonate with his commentary. Certainly you can't undertake any type of large-scale enterprise-wide initiative without support from the leadership and the tonality at the top, and that's the CEO and the board of directors. So without that, that's very important. And another thing I would also say is that, at Salesforce, one of the things we've done is we've reached out to our investors for specific feedback and input about our programs. And it's really, again, those are the people that are holding our stock. And they're also the ones that are holding us accountable. So that partnership and feedback as peers is incredibly valuable. But back to your original question, though, Devinder, let me describe a couple that I'm working towards. And one is core competencies of the finance professional. It is a competency that in the future that every finance professional must possess. And then I'll also talk a little bit about corporate accountability and how do you manage the executive team. So first of all, in terms of competencies, I'm approaching this very similarly to how Salesforce has approached mergers and acquisitions. In my first several years, we did not do an acquisition. But when we started that in our growth strategy, and again, it's part of our business strategy, we had to build muscle, M&A muscle, education, awareness, integration, strategic planning, system investments, integration, compliance reporting, et cetera, et cetera. So I'm analogizing it to that. I've also would say to you that there are tremendous learnings that all of us have that are very personal to each of our companies, because we've learned how to work from anywhere because of the pandemic and the economic fallout. Those learnings become incredibly important in applying them into this new endeavor with ESG. The next topic I'll just cover is corporate accountability, because I'm an advocate of including sustainability metrics in the annual bonus calculation for our senior executives. This is a discussion topic that we're having at Salesforce. I'm trying to lead the effort or participate in that effort because I really believe it's important to align the interests of our stakeholders with the management pay of our most senior executives. And that's not an easy topic here, as the finance professional knows that you have to build out a process to capture this information, to report on it. You obviously have, for any of you involved in incentive comp, you have to do quite a tremendous amount of modeling that goes into it. There's certainly the communication and the dialogue with our executives. And then also, lastly, I would just say is that I want to make sure I understand all of those different metrics, because those are going to be levers. My hope is that our executives will blow out that portion of the corporate performance bonus, because at the end of the day, the biggest winner is going to be the environment. And I think that's a great thing to do. But that's a big challenge. Again, it's a discussion topic at hand. There's filled with a lot of debate on the how. But I think one day we're going to see that. And I'm hoping that'll be one day in the relatively near short term.
Excellent. Thank you for that. I will encourage those listening in to ask any questions that you may have. Use the chat function, as we will be winding up the panelists soon. But I do want to make note to those listening in, saying that you got two key leaders in the industry from our Canadian chapter and also from our US chapter that have seen a lot of this change. As Nick alluded, I mean, their culture has already shifted, but they are dealing with these elements on a day-to-day basis, and the role that finance is starting to play is becoming to be larger and larger. So I think I would encourage those listening in to ask some questions. And with that, I would also like to ask both Joe and Nick, the leaders that are listening, what are some top tips that you could perhaps offer for change? I mean, even though there's no resistance that you have, Nick, but what are some, lessons or nuggets of wisdom that you could share with those that are trying to incorporate change in their own organizations? So I'll start with Nick first, and then Joe.
These are always the hardest questions to answer. Never feel like I'm in a position to impart wisdom to anyone, but I think it starts with being an expert in your topic. Like, I think you have to really understand what you're talking about, and I think you have to be able. And I think in today's world, this is easy. you have to be able to present the business case of why this makes sense. Like, I know it's in the culture and I know it's embedded. And so obviously for the environment, it's obviously easy to say what the environment and society at large, why ESG makes sense is easy, but why for your business should we be doing this? Because I don't think it's a very hard business case to make for anyone these days. And so I think when you put those together, that's what resonates. But I think you have to lean in, you have to be knowledgeable, you have to show an interest and understand your topic. And then when you can engage around that and show the passion for it, but then the business case should be very easy these days. Like, it's just top of mind in everyone you deal with, and it's just becoming more and more of a focus for all the stakeholders. I think that, to me, that's how you make progress.
Excellent. Joe.
Well, Alex, I agree with Nick's comments here. I would also say this, finance is the right home for this area. We have dealt with tremendous amounts of complexity over these decades. Just think about the financial crisis from 12 years ago. Think about the impact the pandemic had on the economics of all of our businesses and across the globe. Think about the plethora of new accounting rules. Think about tax reform. I think you have to look at it from that point of view. And it's like with everything, ESG, sustainability, they're very massive topics. They're very broad in their conversation. I think there's a tremendous need to have a clear line of sight, a clear focus on the clarity. And I think that clarity is very similar to think about acquiring a business. Think about bringing a product to market. Think about expanding into a territory. Expanding into a territory, you're going to be dealing with people you've never dealt with before. That's the very same case within our own company on trying to collect carbon information. It's all, it's not organized data in any means. It's not going to be in any general ledger, but the concepts are there. And I think that's what makes this a professionally challenging topic. And of course, when you have a purpose behind it, like saving the planet, that's a pretty good combination right there that gets people motivated. I would also tell people, go fast. Go fast. This is not an area that you can sit back and this area is evolving. You need to be at the forefront. Investors are definitely asking, stakeholders are asking, you know it, I know it, you got to move fast.
Yeah, that's for sure. Like, the momentum in the last couple of years has been much, much faster than, initially when we were talking about the science of climate change. So you're right. It's definitely a steep element. We have a question here from the audience, perhaps, that I'll ask. I like this one. They thank you for being on the panel. You both work for large global organizations. What would you suggest to folks who may work for smaller organizations and how they're trying to drive change? So that's a good one. Any thoughts? Maybe you want to start with you, Joe?
All right, I'll jump, because when I joined Salesforce 18 years ago, we were small. And so I've been fortunate to be a part of the conversation as a small company, a mid-sized company, and a large enterprise here. Nothing has really changed in that type of conversation here, other than just the number of resources that are available. I think it's about embedding it into your strategic planning exercise, just like finance people do. It's like the culture conversation that Nick was suggesting as well. These are the same conversations. If anything, I think in a smaller company, the access to board members, CEOs, top executives is much easier than I find today working in a 65,000 person company. So back then I could just go down the hall and see the CEO. Now it's a little harder.
Yeah, now you got to climb up, right? That's good. Nick, your thoughts?
Yeah, I mean, this is going to sound like a weird comment, but Brookfield is a large global company, but it still has sort of a few number of partners that still are the senior leadership. So, I think it comes down to strength of relationships and credibility, and how do you drive change. And for small companies, I get it. Do they want to spend millions of dollars putting in processes and controls? Probably not. But that doesn't mean as a team you can't educate people on the importance. And I think for every business, to Joe's point, it's going to be relevant for you in some way. Doesn't matter who you're dealing with, in some way sustainability is becoming a relevant point of conversation. And so I think the ES and G, again, all three, I think centering yourself on the right, putting yourself on the right side of this, and it's moving quick. And so I think even for small business, you do not want to be slow and be caught out on this. So I think it's just building consensus with your leadership and just making sure you emphasize the importance.
Excellent. Joe, I have a question here from you. You mentioned carbon accounting. What role should the accountant play in carbon accounting? And whether the operational work should be done by the accountant, or should the accountant role be more aligned with reporting? So I guess it's a question of where do we draw the line on what finance does and what operational folks do?
Well, it's a great question here because first of all, I think finance gets involved in software selection here because certainly industry-specific requirements are just as important here, as well as the software solutions today that are out there are based upon small businesses and large enterprises. So software selection is huge. It's a huge accelerator. It takes away a lot of the complexity and allows you to focus on your programs and how you're doing and how you're measuring success. But I also think that this is very analogous to the monthly financial close process. If you think about it like that, I also would tell you that this is a part of finance, whether you may disagree with it, but if investors are getting into the conversation, if regulators are getting into the conversation, if standard setters are getting into the conversation, this is in your wheelhouse. That's why I mentioned this is a competency that every finance professional must have. And I gave a couple plugs for A4S and some other things, but I think those will really be helpful for you to understand your role in this area.
Yeah. Devinder, I would just add to that, it's about, again, partnership, and I liken this to in our renewable business, we've been tracking generation on the wind, the solar and the hydro for a long time. And, our finance team works closely with our operations team to gather the data, verify the data, look at the methodology into measuring that data. Can it be, reviewed, assured by auditors? Like, how do we get comfortable in the integrity of the data? And right now, I talked about Carly earlier. She's working really closely with our operations team around capturing, measuring and capturing emissions data, reporting it. What's the rigor we put around the process? So finance needs to be there to help. The operations team, we're going to hire experts in measuring and gathering that data. That's not finance's area of expertise, but where we have the expertise is around process control, tracking, monitoring, and in that we'll become more educated and informed around data capture. But it's a partnership. In fact, everyone in our organization looks to finance as the part of the organization that knows how to do this, that knows how to get around technical issues and build frameworks and reporting processes.
Yeah, that's good.
I think you just said accountants are going to save the planet, Nick.
Oh my gosh, that's right. It's not the world, now it's the planet, right? They're going to definitely save the planet.
Who knew? Who knew?
Who knew? I think, Nadine, do I have time for one more question, or are we running out? Yeah, am I okay? Perfect. I like this one. Someone says they work for a very capital intensive manufacturing organization. And they were wondering, have you seen sustainability been embedded in the capital approvals process? And has it been done already, or do you think it's more of a future state?
I can start too if you want. Yeah, I would say historically, again, I come back to the way we used to invest historically. Sustainability was embedded because it could be identified as a risk to capital over the long term. And so it might not have been specifically sustainability as a box on every page, but it's assessed as a risk for every investment we made. The transition fund, it is a clear investment objective of every single investment that goes into that fund going forward. So for every single investment that goes into that fund, we have to identify the contribution that investment is making to net zero, as I said, around incrementality, avoided emissions, or helping companies on their path to net zero. And so I think that will be the first time when ESG is always something that we have in IC memos, we have to tick, we have to make sure that we've done our diligence, that we're comfortable, it's there with ABC, but this is an actual objective of investment returns and how we're helping that decarbonization. So this will be the first time where I would say it's one of the key investment drivers, as opposed to protecting capital, it's a key investment driver of those transactions. And that will be, I think, the first time that we're really doing that within the organization, even though it's always been there, it's just elevated in importance. And I think that's fantastic.
Yeah, I'd expand on this one because, certainly sustainability affects each industry radically differently. And technology companies are way out in front in their net zero commitments here, but I'm sensitive to other industries like extraction or aviation, where heavily dependent upon fossil fuels. And certainly I think people are talking about this. I got a question similar from a friend the other day on this very topic, and they're struggling with these types of topics. And what I always suggest to folks is reach out to your peer networks here. The Value Reporting Foundation, which again is previously known as SASB, is organized by industry sector. There are definitely huge numbers of advisors that are out there with big name companies that are happy to share their thoughts on how they're approaching capital allocation, strategic planning, budgeting, prioritization conversations, program management. I think these are all leverage all of that. And then certainly I'll make another plug for A4S with their essential guides. This is something you want to build upon and accelerate. This is as opposed to trying to do it yourself.
Thanks. I think there's one last question that I'm going to ask, and this is, back to that greenwashing. So the question here is, how do you avoid greenwashing? Any suggestions, thoughts?
For me, it's back to your corporate values of trust. For us, it's trust and customer success. I think also when you get into this conversation around being accountable to stakeholders, investors, etc., there's no room for greenwashing. But I would say that I can understand it a little bit because of the fact that the accounting standards around this area, the conceptual reporting frameworks, are still in flux. They're still evolving. And I think that's where I think the concept of greenwashing does come in. But I do think it's all around disclosure. Disclosure is very important in this type of world where everything is evolving, to let everyone know what you're doing and what assumptions you were looking at.
Yeah, and I think greenwashing, Devinder, as there becomes more rigor around process, greenwashing will fade away, because I think even in green bonds, like you used to be able to just self-certify a green bond and say it's green, we own renewable assets. Now, we're getting calls from investors, 4 or 5 years ago, well, maybe you should put a framework or have a sustainability or a green bond framework, and we'd like to see where the proceeds are going, or you should state the use of proceeds in the deal. And so I think over the last 5 years, it's evolved to now where when we issue a green bond, there's real rigor around use of proceeds. And so even that greenwashing element is diminishing. And I agree with Joe, just as we evolve here, I have some sympathy, because I think there's a lot of people trying to do the right thing, and the lack of consistency in reporting is leading to people to accuse them of greenwashing when their intentions are good. And so I think it just diminishes as we all get sort of better guidance on the standard of reporting.
Excellent. Thank you. Thank you both very much for your insights and the questions that also came from the audience. With that, I think, Nadine, I'm going to pass it back to yourself.
Thank you so much. And let me just echo, thank you, Joe. Thank you, Nick, so much for so many insights and answering all the questions. So for many finance teams out there, thinking but also operating in an integrated way will require a significant shift, as we heard, not just in their processes, but also in their culture. And where do I begin and how do I get going? So as Joe pointed out earlier, the barriers often to understand how to get started. And as Joe also kindly pointed out, A4S has many tools and resources that can provide you with some guidance on where to start and examples of maybe how other organizations, be they global or small, have approached this necessary shift. And the A4S Essential Guide to Finance Culture provides these practical tools to help finance teams to develop a culture which maybe embraces then sustainability and supports the business in creating the sustainable value. And within this guide, we also covering the evolving role of finance professionals, because the finance function of the future will need finance teams which are committed to integrating sustainability into financial decision making and who understand the benefits this will bring to the organization. And finance will need professionals with a variety of skills, of which we have just outlined some here. And I will just give you a moment to read this so you can actually consider how this may impact you in your current role. And if this now got you started, more details about this and what this can mean for you in practice can be found in the Finance Culture Guide. And in the guide, there are also a number of finance culture tools outlined that will help you to assess your culture and how to change it. And some of these approaches have been mentioned also throughout today's panel discussion. So if you were wondering where to get started, there are, for example, tools which we also mentioned before, like a culture survey, a maturity map, or a change readiness assessment, which can all help you on your way. And which has also been pointed out already today, but understanding your culture is really also the first step. And we recommend carrying out, for example, a culture survey to understand the current culture of the finance team, because this will then provide you with a snapshot of employee perceptions and behaviors. And the results from the survey can help you then, for example, to design strategies or interventions to create the required shift that you actually really want to see. We've also developed a suite of finance culture practical examples, which draw on the experience of our CFO leadership network and beyond. And they show basically the scale of what can be achieved when the teams have the right culture for long-term success. Again, drawing from a variety of organizations. So you can also really find something that you can feel aligned to. And in support of these practical examples, there's also a suite of interviews with finance professionals, again, providing the insights on changing finance culture, such as Joe and Nick provided us also today. So in a nutshell, all these resources are out there to really help you to get started. And to make it even easier for you, we will send you an email after this webinar with outlining all the resources and the tools and the practical examples, so you really know where to get started. And we will also invite you to our next webinar on management information, which will take place on the 23rd of November. And I will finish this introduction of A4S materials with another little poll about the finance support integration of sustainability, because hearing from our panel speakers today and about the finance function of the future, what do you think? In what ways can finance support the integration of sustainability within the organization? I'm curious. Delightful. There are, of course, no wrong answers. These are just all these are just all ideas to really, as I said, to really provide you with insights and ideas on what role you can play. And before we run our final poll and wrap up, I really want to thank Joe and Nick for joining us today and for sharing your insights on driving the necessary cultural change to back sustainability really as one of the core pillars of finance. I'm very certain I speak for the audience when I say it was really, really interesting. And as I said, I will just run now the last poll just to hear how interesting and helpful you found today's webinar. They just help us with understanding how we can make these monthly webinars as useful as possible for the audience. And we will just leave the poll running. And as I said, thank you, Joe, Nick, and Davinda, obviously, and to everyone who's dialed in today and for asking questions and for staying curious. Thank you so much, and I hope we see you all again soon.